Hey guys, welcome to our channel. My name is Diego Rodriguez and welcome to our Universal Strategies channel, where I'm going to be sharing with you different strategies on how to generate multiple streams of income. Okay, so basically in today's video, I'm going to share with you our first strategy on how to earn dividend incomes every week of every month for the rest of your life, guys. And it's a very easy strategy for you guys to implement, right? But for those of you that are new, guys, if you guys want a copy of my Fistful of Freedom, where I share with you 7 different ways of generating income, passive income, right? So basically, at the end of the day, right, the ultimate goal is financial freedom, right? Is it not? So the secret of financial freedom is being able to generate multiple streams of income, right? So down below in the comments, I'll leave a link for you guys to grab your Fistful of Freedom. Is where I share with you 7 different ways that I generate passive income and the strategies that I use that you can also implement in whatever business or goals you have in mind, right? So that being said, guys, welcome again to our channel and let's get it. All right, guys, so basically all I'm gonna do right now is just cover the brick and mortar strategy, right? And I know, guys, I know it's not a sexy title, but bear with me, all right? So all it is really is just the overall frame of my strategy on how to make cash flow every week, right? How to get paid dividends every week of every single month, right? But I mean, like, technically, as you can see here, you can technically, buy as many stocks to actually get paid every single day of the entire year, right? But that would be kind of crazy. That would be like, don't get me wrong, of course, the age-old wisdom of any investment you do, right? You never want to have all your eggs in one basket, meaning you want to diversify, but at the end of the day, you don't want to diversify so much that you're not actually making any headway forward, right? Like you're spreading yourself way too thin that you're not actually seeing any results, right? So you got to have a balance, right? You want to diversify, but again, you don't want to diversify so much that you're not actually making, any movement forward, meaning like you're not building, right? You're not making money. So, but I always like to make that analogy, guys, like that little, if you guys can picture like a little snowball, right? Pretend like a little snowball at the top of the hill, right? And as time goes on, right, that little snowball starts rolling down the hill and it starts getting bigger and bigger and bigger, and it starts moving faster and faster, and before you know it, right, this thing takes off. It has a mind of its own. But what I'm getting at here, guys, is that analogy has to do with compound interest, right? So all this strategy is that you slowly start building, depending on, how much money you have to start out with when you start to buy like these dividend paying stocks, right? So depending on how much money you have, it doesn't really matter, right? It's all about getting started and slowly and, have a little bit of discipline to continue to build your little snowball, right? And the beauty about it, like, this strategy does benefit you in the short term, because I'm going to show you here how you can actually get paid cash, like not cash, but dividends, right? How you can get paid dividends weekly, right? So weekly cash flow. Not only that, but the beauty about this strategy is that not only is it going to benefit you in the short term, but this really takes off in the long term, meaning like 10 to 15 years from now, if you steadily continue to reinvest your dividends and also add in more money, right? Because in the beginning, of course, that little snowball, right, is going to be rolling down the hill slowly. But if you continue to inject money, right, you like kind of like edge it along, give it that little boost of momentum for this thing to really take off. So not only are you going to reinvest your dividends, but you're going to also add in money as this thing takes off, if you can, depending on your budget, right? So when I say brick and mortar strategy, right, as you can see here, like I've broken down our year, like all our months in the year, right, 12 months in the year, and then every quarter, right? So the first quarter is January, February, March. Second quarter, April, May, June. Third quarter, July, August, September. Fourth quarter, October, November, December. So, and then on this side, I've broken down into weeks, right? So every month usually has like 4 weeks, right? Like I know it's 30 days, but I try to break it down into 4 weeks. So the week 1 is going to be day 1 through day 7 inside each month, right? So week 2 is day 8 through 14. Week 3 is 15 through 21st. And then, of course, we end at week 4, which is 22nd to the 30th, right? 22nd to the end of the month. Of course, some months have 30 days, some months have 31 days. Of course, February only has like 28, right? But you guys get the point. So what I'm doing here, my brick and mortar strategy, right? So if you guys don't understand what this is, right? So when you're building a brick wall, right? If you guys could picture a brick wall, right? We're stacking on bricks. And then what holds the bricks together is like a cement mix, also known as mortar, right? That's what seals the bricks. That's what's going to seal my brick wall and hold it together, a solid wall, right? So my bricks are going to be the individual stocks that pay out quarterly, right? If you guys are familiar with stocks, right? Of course, some stocks pay dividends and some don't, right? This is strictly speaking about the stocks that pay dividends, right? And then as far as the stocks or the companies that pay out dividends, some companies, like usually the majority of the companies that pay out dividends, they pay them out quarterly, meaning like they pay out every 3 months, they're going to pay out a dividend, right? So they're going to pay out the first quarter, the second quarter, third quarter, and fourth quarter, right? You guys following me so far? So the ones that pay out quarterly, they're either going to pay out in January, February, or March, meaning like it's either going to pay out the first month of the quarter, right? So they're going to pay out January, and then April, and then July, and then October, or they may pay in the second month of the quarter, meaning like they might pay in February, and then in May, and then again in August, and then again in November, right? So you guys are following me, right? So let me just make it a little bit easier for you guys to visualize, right? So let's say, let me go back here. So let's say this stock, right? This brick, right? My brick is in reference to the stocks that are paying out dividends quarterly. Okay, those are my bricks. So if this stock usually pays out that first month, right? That pays out in January, and let's say it pays out January, but that first week in January, right? So that means if it pays out quarterly, then it's going to pay out in the second quarter, is going to pay again in April of that first week, right? The stocks usually pay out like either the first week or the second week, right? Or the third week or the fourth week, right? They always try to keep that same pattern because they know people or that are investing in that stock want to have like that steady income, right? They want to have something that they can depend on month after month or quarter after quarter, always paying out at the same time, okay? So these companies understand that the people that are investing in that stock want something that's pretty much predictable quarter after quarter, okay? So again, like this stock again is going to pay out again, right? You guys are following me in July and then in October, excuse me, right? So if you know this stock is paying out that first week in January, then you know it's going to repeat the same cycle that first month of the second quarter, right? And then again, that first month of the third quarter and so on, right? And that's just one brick, right? In my brick and mortar strategy, meaning like that's just one stock, right? But then again, there may be another stock, right? Let's change up the color. That way you guys can follow me. Like another brick. Like let's say this one pays out usually in February, right? Usually that second month within my quarter. So let's make this one purple, right? So this brick, let's say this brick pays out the second month, February, but it pays out the second week within the month, right? You guys are following me? So this one's gonna pay out in the second week, but it's gonna follow the same pattern quarter after quarter, meaning like it's gonna pay out here, and then it's gonna pay out again in May, right? And then on the second week, right? And then again it's gonna pay out in August, right? And then again in November, right? So you guys are following me so far, right? So as you can see, my whole strategy, all I'm doing with my bricks are filling in the gaps. Filling in the gaps. That way, if you guys are seeing what I'm getting at here, right? So let's say now I gotta find a brick that usually pays out in March, right? So let's make this one red, right? So this brick is gonna be red, and we're gonna say, well, this one usually pays out the third week, right? But quarterly, right, it pays out in March. So now I know if it pays out in March, that means the next quarter is going to pay out on that third month, right? The third month of the second quarter, which is June. So it's going to pay again on the third week, right, of that third month in the quarter of June. Okay, I hope I'm not confusing you guys, right? You guys following along? Right? It's going to follow the same strategy over and over again, right? The same strategy is going to keep throughout the quarters. It's going to keep paying you out the same time over and over again. So for example, you know, and again guys, at the end of the day, just my little quick disclaimer, I'm not a financial advisor, I'm not a stockbroker, right? At the end of the day, guys, you guys need to like research your own stocks and find out which one's the best for you and your strategy, right? All I'm doing here is sharing with you the strategy that has proven to work for me, right? So what I would like to do with you guys, right, is like in this video, all I'm doing, guys, is just sharing with you the overall strategy that is proven to work every week, right? Because I've nailed this down to a point where I can get consistent dividends paid out week after week, month after month, okay? So this strategy is gonna help you get cash flow every week, okay? I don't wanna hit you with too much and overwhelm you guys, okay? But that being said, guys, right, make sure you guys subscribe, right? If you haven't yet, make sure you guys subscribe and hit that little bell to give you notifications when our next videos come out, right? That way our next video, once we start breaking down the exact stocks that I'm picking and why I'm picking the ones that I am picking, okay? And then I challenge you guys to share what stocks you would pick, right? And why you picking those stocks, okay? So make sure you guys subscribe, right? So let's continue on, okay? So, and then of course, like week 4, then we pick out another stock, right? So let's just say this stock here, we're gonna paint this one green, right? We'll pick green for this one, okay? Or what is that, magenta? Or not magenta, what is that, like aqua, green, whatever you wanna call it, right? So let's just say this stock here, right, pays out the 4th week, right? So as you can see, right, even though every quarter, right, every 3 months is a quarter, right? So as you can see, there's only 3. So technically, right, I could cover every quarter if I only had 3 stocks, but every month has 4 weeks, right? So January has 4 weeks, February has 4 weeks, and March has 4 weeks. So that's why we've got to have at least 4 stocks, right, within any given month. All right, guys, I hope I didn't lose you yet, right? So you guys are following me? So as you can see, the reason why I have to pick 4 stocks, right, every month has 4 weeks in it, right? So technically, if I'm going to cover weekly cash flow for every month, I need at least 4 different stocks in the month of January, right? That way, January has week 1 has 1 stock, right? January week 2 has another stock, right? You guys are following me? So January to week 3 has another stock. And January to week 4 has another stock, right? So if I got 4 stocks, right, I don't want to pick orange again because I don't want to confuse you, right? So let me go back here. the reason why I've got to pick 4 stocks is because I've got to cover each week within any individual month, right? But right now, first, I just want to break down the quarters, right? So technically, right? Technically, if you really look at this, I don't really have to worry about what's going to happen in the other quarters, right? Because, hold on, let me get a little fancy here, right? Because technically, I can cross this out, right? Let me see if you guys can actually see this, make it a little bit darker, right? So technically, I can cross this out because whatever I do in this first quarter is going to technically repeat itself every other quarter, right? So I don't even have to worry about anything that's going on here because all I really need to do is focus on what stocks I'm picking that are going to pay out in January, and then they're going to pay out in February, and then they're going to pay out in March, right? Because anything I do here in that first quarter is going to repeat itself in all the following quarters, right? You guys are following me? So then technically, all I really have to do, if I want to get paid every single week, every single month for the rest of the year, right? All I really got to do is find out what stock is going to pay me in January, the first week, and then in February, right? So this is going to be stock number 2, and then stock number 3, right? So let me erase these colors because I don't want to confuse anybody here, right? So let me just erase that, right? So remember, the orange is each brick, right? So each stock is another brick, okay? So let me get rid of the colors because I don't want to confuse anybody, right? So this is going to be stock number 1. It's going to pay out in January, but now I know because it's a quarterly paying stock, it's going to pay out every other quarter on that first month, okay? Right? So then again, in February is stock number 2, right? Because I know it's going to pay out in February and every subsequent quarter after that, right? So that means February, that means May, that means August, and that means November, right? And then stock number 3, I know it's going to pay out on that 3rd month of the quarter, and then in every subsequent quarter after that, right? Meaning that 3rd month of every quarter. So March, June, September, and December, okay? So now we know anything I do in these first 3 months is going to automatically repeat itself every quarter after that, okay? So then that solves that problem, so we don't even have to worry about any of these, right? Because we know everything I do here is going to follow the pattern, right? So stock 1, stock 2, stock 3, okay? But that's just the first week, right? So now I got to deal with the second week. So then I got to figure out what stocks are paying me on the second week of January, right? So this is going to be stock number 4, right? And then determine what stock is paying me on the second week of February, right? So that's stock number 5. And then so on and so forth, right? Stock number 6. So as you see what I'm getting at here, guys, in order for me to get paid out every week of every month, technically, what I really need, right, are 12 different stocks, right? And these are my bricks, right? When it comes to the brick and mortar strategy. So technically, if I pick out 12 different stocks that pay out quarterly, then I'm covered for the rest of the year, right? So that's it right there as far as my bricks are concerned, right? But now let's get into the mortar part, right? Remember what I said, mortar is just that cement mix that solidify my brick wall, right? That kind of fill in all the gaps just in case, like, if this company happens, like, something happens to this company, right? Because at the end of the day, it's still a risk, right? We never know. Some of these companies, right, are like they consider dividend paying, like dividend aristocrats, meaning like they've got decades, right? Decades of proven track record of paying out dividends. So these companies are going to try their hardest, their damnedest, to continue to pay out dividends because they want to stay on that list, right? And the beauty about it is that this list is already made. So we don't have to like, go crazy trying to go out there researching every stock of every company, right? Luckily for us, a list is already made of these companies, right? And I'll put it down in the description below. I'll put the link down below, right? Some of these are considered to be dividend aristocrats, meaning like some of these companies have over 40 years of paying out dividends, right? While other ones, they're called dividend champs. I think it's like over 25 years. And then they're called dividend contenders. I think they have like over 10 years, right? And so forth, right? So the stocks that I'm picking, my bricks, right? These numbers are my bricks, my dividend paying stocks that have been proven, have a proven track record of paying out dividends for years now, right? So case in point, right? Where was it like that? The last, we had the foreclosure crisis, right? You guys remember like what, 2008 to 2012, right? Is when we went through that whole foreclosure crisis, and some of these companies like, took a lick, like depending on what industry some of these companies are in, right? They took a hit, and some of them had to stop paying dividends, right? So unfortunately, like the good thing is like during bad times, I can research to see like, okay, during bad times, did these companies still continue to pay out dividends? So if they did, then that's a good proven track record for me to pick that stock, right? But again, in this video, I don't want to like break down too much exactly how I research, right? In this video, I'm just breaking down the overall strategy of my brick and mortar strategy of how I pick my stocks to fit in, right? To fill in the gaps, right? To build my little brick wall of paying out dividends week after week, month after month, right? And again, all I got to really focus is in that first quarter, right? Because most of the dividend paying stocks are paid out quarterly. But that being said, there are some companies out there that pay dividends every month, right? They pay out dividends like meaning like they pay out every single month, January, February, March, April, May, right? Instead of doing quarterly, they'll pay out every single month. And hence my mortar part of the strategy, right? The stocks that I pick to solidify my brick wall are the stocks that are paying out monthly, right? So depending on like what good turns or bad turns the specific industry may take, or the specific company, right? My specific brick. Like if for whatever reason, all of a sudden, this company here, for whatever reason, stops paying. Like let's just say like this company here, whatever brick I chose, right? In January, the second week, if that company for whatever reason, like let's say for example, in this pandemic, like they got hit hard, right? And then they're not able to pay dividends anymore. Well, guess what? That's why I have my mortar, right? My stock that's going to pay out every month, right, of the year to cover me just in case one of these stocks for whatever reason stops paying out dividends, right? So you guys following me so far? So now the mortar part of my strategy are the dividend paying stocks that actually pay out every month, month after month, okay? So again, I'm trying to build my brick wall, right? So my bricks, I'm piling up my brick wall, which are paid out quarterly. And then my mortar is the actual dividend paying stocks that actually pays out every month, right? So for example, one of the ones I like is Realty Income, right? Stock symbol O, right? So Realty Income usually pays out the third week of every single month, right? So not only do I have stocks here, but just to make it a little bit visual for you guys, it usually pays out the 15th, right? And in a few seconds here, I'm going to show you exactly how I find out exactly when these dividend paying stocks pay out, right? It's not a mystery. That's the beauty about it, that you could actually go in there and find out exactly when they pay. And they tell you ahead of time, right? So that way you know exactly which ones to invest in and when you should do it before the actual ex-dividend date is what they call it, right? And I'll break it down here in a few, right? I don't want to confuse you too much right now. Right now, I just want to break down the whole overall strategy of the brick and mortar strategy of cash flowing. So again, like one of my mortar, right, one of my Mortar stocks, I got to come up with a sexier name for that, but for now we're going to call it brick and mortar strategy, right? So one of my Mortar stocks, right, is Realty Income, right? Because it pays out every single month, right? So let me just highlight this. That way you get a better visual of what I'm getting at here, right? So it pays out every month, and it usually pays out on the 15th of every month, right? But remember, right, like the stock market is open Monday through Friday. So if the 15th lands on a Saturday or Sunday, then it's going to pay out that following Monday, okay? For the most part, Realty Income usually pays out on the 15th of every month, right? But Realty Income is not the only one, right? So there are other stocks that pay every month, but again, right, I'm not gonna double up on the same. Like if they all pay out on the 15th, then I'm gonna pick out the one that best fits my strategy of how I pick out my stocks, right? So, you know, a lot of them tend to pay out. A lot of the I'm talking about the ones that actually pay out every month usually pay out on the 15th, right? So that's why I'm only picking Realty Income, right? But that's not the only Mortar stock I have, right? But for now, again, guys, I just want to break down the overall strategy, right? I have other stocks that pay out every month, right? But I'm not going to pick out the same week. I'm going to make sure I pick out one, right? As far as my Mortar stock that's going to pay me out, that's going to pay out on the 4th week, right? That way I'm diversifying. That way I'm solidifying my brick wall. Making sense? Right? So this green line is my stock. So the one I mentioned here was stock symbol O for Realty Income. So Realty Income usually pays out the 15th of every single month. So I'm covered right here, right? So all my bricks, right, all my bricks are being paid out quarterly, and my Mortar is paid out monthly. That way I got a solid brick wall, right? That's gonna pay me week after week cash flow. So not only are my bricks paying me every week, but on top of that, my monthly stock is also paying me, right? Month after month, depending on what week it falls in, right? The brokerage that I use is TD Ameritrade, and they force you to start, right, with the minimum of 1,000, okay? So let me go here, right? So I spoke about Realty Income. So this TD Ameritrade, this is like their platform, and I love using it, right? But first of all, like I'm not an affiliate, right? I know like a lot of other guys that are coming on here talking about, you know, using like Webull is another platform they use as far as a brokerage for you guys to buy stocks. But I want you to pay in mind, like a lot of them are you know, advertising or recommending Webull is because they may be affiliate, right? They may be affiliated with Webull, right? And there's nothing wrong with that. You know, people make a living coming on here making videos. So, but I'm not affiliated, right? Disclaimer, I'm not affiliated with TD Ameritrade, but I do use it, right? As you can see here, right? I do use it. And the reason why I like it, for one, is very, very easy to use. Number two, whenever you're buying or selling a stock, they do not charge you a commission, right? So the price you pay for the stock is whatever the stock price is. It's when you start getting into a little bit like more advanced type of trading, like maybe trading options and things like that, then that's when they're going to start charging you a commission. But if you're just doing regular, like just buying and selling of stocks, you don't have to pay any commissions, right? Which is pretty cool, right? And not only that, but you could actually, like in this strategy, you could actually, like, you know, open up like a retirement account, like a Roth IRA or traditional IRA. Like I don't want to get too much into the different types of accounts that you can, right? I'll do that in another future video, okay? So make sure you guys subscribe, right? And make sure you hit that little bell. That way you get notified whenever the next video comes out, right? Because the next video, I'm going to actually break down each individual stock of how I chose that stock and where it fits in my little calendar, right? As you can see, right? I've got 12 different stocks. And I'm going to tell you, right, why it fits in so perfectly, right, as far as my 12 little stocks, right? For some reason, like, the universe is like mathematically aligned. I don't know how, but you know, guys, once we start learning like the secrets behind like the mathematical equations of the universe, not to get too geeked out or too deep into it, guys, but believe it or not, guys, you'll be surprised at how, like, maybe it's just coincidence, but certain numbers for some reason happen to fall into place, right? But that's a topic for another day, right? But what I'm getting at here, guys, I love TD Ameritrade because like you could pick out like retirement accounts. So like not only do I have my brick and mortar strategy for my regular account, like meaning my cash flow. So once I get this to a point that if I need the money that gets paid out, I can actually take out my weekly dividends and pay my bills, right? Because I know it's gonna come every week, right? But again, like that's the beauty in the short term, right? I could like use the dividends if I need to. But remember, I used that analogy in my little snowball effect, right? Of the compounding interest, where this thing really takes off is if you constantly reinvest those dividends back into my little snowball, right? That way you start building the snowball, and as time goes on, this thing, the little snowball gets bigger and bigger and bigger. And not only that, but it also gets faster and faster and faster, meaning like it's getting bigger, but it's growing exponentially, meaning like 10 to 15, this thing really takes off like 10 to 15 years down the line if you constantly stay with that, discipline of not only reinvesting your dividends, but also adding more money into this, right? That way you really fuel this thing and this thing really takes off faster, okay? Because what you want to do is kind of like feed the machine. You want this beast to like, once it starts giving you like weekly dividends, right? You want to have enough dividends within the week that you can actually buy more stocks, right? Like I know like some people may think like, well, if I only have like $1,000, then, if I diversify too much, then I'm not going to be able to pick up as many stocks, right? And yes, you're not going to be able to do that, but, right? You got to take baby steps depending on where you start, right? So again, if you're just starting with $1,000, then maybe just start out picking out 3 stocks that are going to fall in January, February, and March. That way, every quarter after that, you're going to keep getting paid, right? And before you know it, as the dividends are getting paid and as you're able to, fuel this, keep feeding the monster, keep feeding more money into this. So not only are you putting in more money, but you're also reinvesting your dividends. This thing starts taking off, and before you know it, right? Now you've got more money and you can start stacking on your little bricks, and before you know it, you got 12 different stocks that are going to pay out every single week of every single month, right? Come up with your own strategies and share it with us in our channel, right? So go ahead, comment below, guys, and let me know what you think and what strategies maybe you're using, right? Because I know I don't have a foolproof plan. At the end of the day, there's always a risk. It's always a risk investing in any type of investment, right? God forbid, all of a sudden a tragedy might strike, like, during this pandemic, right? I had stocks in here, right? Like I've been doing this strategy now, full disclaimer, I've been doing this for like maybe like 3 years now, 3 years that I actually implement this specific strategy, right? I've invested for years now, in dividend paying stocks, but then I started breaking this down, started like geeking out, and then it came like a realization like, hey, I can actually, like if you really think about this, like you can actually get so fine-tuned into this that you can actually pick out stocks for every single day of the year, guys. But I don't want to diversify so much, spread myself so thin that I'm not actually making headway, right? That I'm not actually building, okay? Right? So technically, if you picked out 60 stocks, you can actually get paid every single day for the rest of your life. But again, that takes a lot of money to invest into 60 stocks, right? To make a significant amount of purchase, meaning like enough shares for this to actually pay off, right? So that's why I don't like doing that, because at the end of the day, that's spreading myself too thin, right? That's why I want to stick to 12. Magic number here is 12, right? So let's keep going, guys, all right? The way you find out exactly when these stocks pay out, right? Like the way I do my research, like I come in here, right? I go into the calendar. And then when I scroll down, right? There are 2 dates. There are 2 dates that you need to know when it comes to dividends, right? There's the ex-dividend date, and then there's the actual pay date, right? The beauty about these stocks is that it's not a secret. They actually tell you exactly when they're going to pay you out. That way you know ahead of time, right? So, like for example, this one, like as you can see, Realty Income pays out every single month. during the 15th, right? Like you see like sometimes 14, sometimes at 13, sometimes 16. And that's usually because like the 15 may have fallen on the weekend, right? So if it falls in on the weekend, they're either going to pay you that following Monday or they might pay you that Friday, right? So again, the 2 dates you need to know, the ex-dividend date is like, for example, this says February 26th of 2021. That means that you need to have bought shares of this stock before this date in order to reap in the next dividends being paid out. So if I buy this stock on the 26th or the 27th, well, guess what? I'm not going to be able to get dividends on March 15th. I'm going to have to wait for the next month, which is April. So again, the ex-dividend date is the date that you need to own shares of this stock before that date. You need to own it before this date in order to cash in the very next time they are due to pay, which is the pay date. Okay? Realty Income just happens to be one of those dividend paying stocks that pays out every month, which is one of my Mortar stocks, right? Remember, back to the strategy, brick and mortar. Okay? But in this video, I don't want to break down exactly every single stock that I own, right? We're going to do that in the next videos, right? So make sure you subscribe to our channel. Okay? But not only that, another layer on top of this is that I'm going to diversify in different industries, right? So like case in point, like what I was just talking about, one of the industries that got hit hard during this pandemic was like retail, restaurants, retail, like tourism is another thing that got hit, or retail like malls and outlets and things like that got hit. They got hit so hard that some of these companies had already years, right? Like years of proven track record of paying out dividends, but they had to stop. They had to stop paying out dividends because the price of the stocks was dropping so drastically that they couldn't afford to keep paying out dividends. But, right, again, my strategy has nothing to do with whether or not the stock prices go up or down. I'm hoping that the price of the stocks go down, because if the prices of the stock go down, now I know I could buy more shares as long as they keep paying out dividends, right? But if they stop paying dividends, what did I do? As soon as I see like that company stop paying dividends, I'm going to cash in. I'm going to sell all my shares of that stock, of that company, right? Whatever my brick is. If they stop paying out dividends, I'm going to sell all my shares, and then I'm going to go back to the drawing board to see which other company is going to fill in that gap, right? But the good thing is, because I have my mortar, right? Because my mortar is set, whichever brick stops paying out, then I'm already covered, because my mortar is going to fill in the gap, right? You see what I'm getting at here? That's why my mortar is in place, okay? To make sure in downtimes, if all of a sudden one of these bricks stop paying out dividends, I'm covered with my mortar, right? So all I do is I do the research. I go to Johnson & Johnson. I go to my calendar, right? I go to calendar to find out when are they going to pay out, right? So as you can see, they pay out every quarter, right? The oldest one they got here is June 9th, then September, then December and March. So if we go back to our little calendar, right? So June, September, December, and March. If we go back to our calendar, what is it saying? It's saying they paid out June, paid out September, paid out December, and then the new year, then it went back to March, right? So I know it's usually on the 9th or the 8th, right? The reason it's different is because that may have landed either Saturday or Sunday, right? Remember, the stock market is only open Monday through Friday. So if I go back here, I know at least it's that second week, right? You see what I'm getting at? And it's March, second week. Go back to my calendar. So we go here, March, second week. So guess what? My brick here, my stock number 6 is actually Johnson & Johnson, right? And then now I know next time, right? Because it's falling between the 8th and the 14th, right? That's week number 2. So now I know again, Johnson & Johnson is going to pay out here. And again over here. And again over here. Right? So again, all I really got to focus is on these first 3 months. Because I know the same pattern is going to continue over and over again. Okay. But what I was getting at here is how to research which stocks, like which bricks am I going to fill in the gaps. So if for whatever reason, let's say all of a sudden, even though Johnson & Johnson is one of my all-time favorite stocks, but, right? And again, I don't care if the price of the stock goes up or down. I hope, as you can see, it's pretty expensive right now. So I'm hoping the price goes down so I could buy more shares, right? But if the stock price goes up, that's just icing on the cake for future, right? Because this is a long-term strategy, right? Remember my little analogy is that snowball effect, where compound interest really takes full effect is 10 to 15 years down the line. That's when this thing really becomes a beast. It has a mind of its own, because in the short term, your first goal should be having enough shares of stock that's going to pay you out enough dividends to be able to afford to buy another share, right? That way the machine is feeding itself. And not only is it feeding itself, but on top of that, you want to actually keep investing more money into this. And I continually just keep stacking, right? But they're still paying out dividends, right? Again, if I see a company stops paying out dividends, I'm not investing in that company anymore, right? I'm going to sell all my shares and go back to the drawing board to research, okay, which is going to be my new brick. That's going to go back to my little list of dividend aristocrats or dividend champions, the ones that have a proven track record of paying out dividends for years now, especially during down times. Okay, so that's how I pick out my bricks, my brick and mortar strategy. But now, the way I diversify, not only am I diversifying as far as when during the calendar year it pays out as dividend, but I'm also diversifying in what specific industry it's in. Another resource I like to use is called Sectors. It's called Sector Spiders, right? But the website is sectorspdr.com. Okay, and I'll put the link below in the description, guys. And all you got to do is go to Tools, click on Sector Tractor. And the reason I love this, one of the reasons why, is because it actually breaks down the different industries within the stock market, right? So not only am I diversifying as far as picking companies that pay out on different months, and not only am I diversifying which ones pay out in different weeks of any specific month, and also which stocks pay out quarterly and which stocks pay out monthly. But another layer to that is that I'm actually when I'm doing my research, there are going to be a lot of great companies, but unfortunately they tend to pay out at the same time. They might pay out always on March. So the way I figure or I determine on which stock I'm going to pick out, even though there might be two great companies, is what actual industry it's in. So what I'm doing, and let's count them, right? Remember, I went back to the math. Let's count them. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Almost fell in there perfectly. 11 major industries is what it's tracking, right? So I'm going to make sure I have at least one stock within each industry, right? But that being said, if I'm not able, at the end of the day, I'm still the number one layer is there's a proven track record of paying out dividends, right? The second layer to that is making sure it's in one individual month, right? And then the third layer to that is what specific week within that month, right? At the end of the day, I still want to make sure I've got all my bases covered as far as every single month and every single week, right? So case in point, maybe just because the way it lands, maybe I may have two different stocks in the same industry, right? But what you don't want to do is have all of your stocks in the same industry is what I'm getting at, right? So case in point, there are 11 different industries. So I know in my specific portfolio, I've got two stocks inside healthcare, right? Just to be totally transparent. So here right now, it's showing you what's going on in the industry within the day, like what stocks are moving, right? So the good thing about this, like I can actually click inside this specific industry and it'll tell me all the stocks that are within this industry. So all you got to do now is now research, okay, which ones of these stocks have a proven track record. Like I go back to my list of dividend aristocrats and champions, right? Again, I'll put the link inside the description below, right? Make sure I have a proven track record of paying out dividends for at least 10 years or more, right? Because I want to make sure during like not only this pandemic, but also like in the foreclosure crisis that happened like back in 2008, 2012. So that's what, like almost 10 years now, right? So at least bare minimum, I have a proven track record of paying out dividends for at least 10 years now, right? So when I'm doing my research, I'm gonna go within every industry to make sure I pick out at least one, right? But as you can see, there are 11 industries, but I needed 12. So I gotta double up on at least one. And the one I doubled up on was healthcare, okay? And that's just me. Like you guys, at the end of the day, you gotta pick which one you like, okay? Case in point, like one of the bricks, one of the companies I was investing in stopped paying out dividends. So what did I do? As soon as I seen that, even though it was a pandemic, and I know a lot of them were getting hard, but not all of them stopped. Not all of them stopped paying dividends, right? One of my Mortar stocks, right? I call it Mortar because it pays out every single month. Is Realty Income. Even though it got hit hard, like the whole industry did in real estate, but it still continued to pay out dividends. So that's a great, a great sign of even during this pandemic, it still continued to pay out dividends. So that's going to be one of my solid picks because I know it's got a proven track record during hard times to continue to pay out dividends, right? But again, what I'm getting at here is I'm gonna diversify enough, right? I know I need to pick out 12 different stocks. So logically, I wanna be diversified enough to have my footprint in at least every single one of these industries, all right? And all you gotta do is just click on each one and go through and find out which ones you like and which ones are gonna fit, right? Back to the first layers, it's gotta fit within each individual month and each individual week, right? That way you figure out which one are going to be your 12 bricks that are going to build your wall, and then we're going to solidify that wall with our mortar as far as like which stocks, right? So technically I've got 12, 13, and 14. Like in my portfolio, I've got 14 different stocks, right? So this is going to be number 13. Right, number 13 because this is my mortar. And number 14, this is my mortar also, right? This one happens to be real estate. So not only do I have this one, which is my mortar, which happens to be in real estate industry, but I also have a brick, right? A quarterly paying dividend stock that's in real estate also, right? So my mortar is not going to stop me from investing within the industry. I'm going to make sure my bricks are covered in every single industry. But another layer to that just happens to be Realty Income that happens to invest in real estate because it's a great company to own. Because number one, it's got a proven track record of paying out dividends, and it fits my strategy of paying out every month, and it fits nicely right in the middle of the month, right? Because it pays out the 15th of every month. But then I have another one, which I'm going to keep sharing, guys. So make sure you guys subscribe. I'm going to keep sharing in the future videos, right? So make sure you subscribe and click that little notification bell. That way you guys get notified once the next video comes out, where I'm going to start diving more deeply into every stock that I'm picking, right? To cover every quarter. Right? And then of course I'm going to cover my mortar, right? So I already shared with you, this one is Realty Income, and then there's another one, and it's not in real estate. Okay, so there are so many different layers to this, and that's why I love this strategy, my brick and mortar strategy, guys. Unfortunately, I don't have a sexier name for it, But hopefully you guys can help me. So please, by all means, comment down below. Let me know if you like the strategy, your concerns, questions, and all that good stuff, right? And if you could come up with a better name, by all means, like, share it with me, right? So that being said, guys, that's it for today, right? And like I always tell my students, at the end of the day, guys, trust your gut, follow your heart, bet on yourself, and double down. This is Diego Rodriguez signing out. Peace, and we'll see you on the next one, guys. Be safe.